What is up, XRP community? Welcome back to another video. Thank you for joining me. I want to talk about an XRP price prediction within the next 2 to 3 years. A comment from Ripple CTO that relates to the current liquidity crisis that we have in the global markets and how this liquidity crisis can mathematically force XRP's price up. Not speculation, just math. But first off, there was this meme going around Twitter, and it just says a lot about Bitcoin and XRP. Now, it says XRP partners. These are actually Ripple partners because a lot of these institutions do not use XRP because it just got regulatory clarity. However, they do use other products that Ripple offers. And if you've ever done sales, once you're in the door with one person and you sell a good product to them and they're satisfied with your customer service, if you have another product that solves a problem for them, which in the case of cross-border payments, I think we all know there's been no innovation in the space for decades. That's what Ripple does with XRP. Bitcoin, well, they just have El Salvador. Check this out from David Schwartz right here, okay? Talking about a higher price for XRP and how it would help Ripple in several ways. He says the most obvious benefit to Ripple of an increased price of XRP is that it increases the value of Ripple's XRP. This means that Ripple has a greater ability to incentivize partners and liquidity. It also means Ripple can raise more revenue by selling XRP. Indirectly, more value almost always means more liquidity and trade volume. XRP already has each of the other characteristics needed to be a good intermediary asset, but it will be initially limited by the available liquidity. Greater liquidity will give Ripple more flexibility to target larger corridors. Guys, this is back from 2017, so about 6 years ago. And keep in mind, the past month, we had the release of the automated market maker on the XRP ledger. Big word, automated market maker. If you don't know what that means, essentially, you don't need to know what it means. This is what it does. It makes transactions more seamless because there's no middleman, and it also lowers the fees. So who doesn't like that? Less friction, lower fees. Also, to some extent, Ripple's success is limited by people's perception of Ripple's success. If you think Ripple's payment technology is going to be the next big thing, you'll be willing to invest the money and resources needed to implement and deploy it. If you think Ripple is a scam, you're not going to integrate it or perhaps even look at it. Whether it makes sense or not, XRP's price is seen as a measure of Ripple's success or likelihood of future success. It is also important that it not be terribly expensive to hold XRP. And this is the key part. A higher price will mean that a similar size cell will produce less volatility. So a higher price could mean a lower cost to hold XRP. So long as XRP's general price direction is up, the volatility can be hedged without much difficulty. When we talk about a cross-border asset, we don't want something that's super volatile. And so by having a higher price, there's less impact when it is bought and sold. When Bitcoin sold for $1, you couldn't really use them to buy or sell a house. You can now. Bigger transactions require bigger value. The higher the price of XRP, the larger the payments Ripple can target. And what has Brad Garlinghouse said in the past? All the money. When you're expecting exponential growth, even a small increase in your starting point can pay huge dividends down the line. And this is kind of eerie because it's going all the way back to 2017, and we've seen the immense, progress that Ripple has made over these past 6 years. I want to take a moment to say thank you guys for watching the video. If you want to give me a gift, just smash the like button. It does a lot for the channel, and I genuinely appreciate it. It also lets me know you enjoyed the video. If you don't, then give me a thumbs down. All right, be honest. And talking about the macroeconomic situation right here, the Bank of International Settlements discussing how a third-party currency with sufficient liquidity is needed for cross-border payments. Take a listen.
With all that in mind, how do we deal with this issue of exchange rates and interoperability? How do we get these digital currencies to really just talk to each other?
Yeah, that's a great question. And I think when we talk about interoperability, we can see it at least in 3 different levels. So the first level is how we manage domestic interoperability. So how we generate this digital currency solution and make this speak with the other things that are out there in a little bit in the idea of generating a platform so that everyone can connect to that platform and take advantage of the huge network externalities that we can get out of there. The second level is how do we manage cross-border transactions, even within the same currency, and that presents a certain level of challenges there. But when we talk about cross-currency and cross-border, then we face a completely difficult and different environment, and we can see 3 dimensions here. One is the technical dimension, so how we manage to get a system that speaks in a certain cryptographic language to speak with another that speaks another slightly different language. So that is one level of complexity. We need to get the technologies to speak to each other. The messaging element is fundamental. The second dimension, which is much more complicated to solve, so that one, the first one was the easy one, okay? And there is a lot of money that is being put in terms of trying to solve these technical issues of interoperability. Now, the second one is more complicated. It has to do with liquidity. So imagine that you have a pair of currencies for which there is not a complementary demand. You need to go and search for a third-party currency in order to make this settlement actually happen. And this really complicates things. So we need to put pieces of technology that can make more efficiency this use of liquidity so that more transactions can be settled. The third dimension.
I'm going to play that part one more time because those last 10 seconds were really the bread and the butter of this clip.
Currency in order to make this settlement actually happens. And this really complicates things. So we need to put pieces of technology that can make more efficiency this use of liquidity so that more
We need to put pieces of technology together to make more efficiency in this use of liquidity, talking about a third-party settlement tool. Now, whether we speculate on it being XRP or not, it's very clear this has always been the goal of XRP. And some Elliot wave analysis. If you guys need a spot to get XRP really quick, I recommend Uphold. It's sleek, it's simple, it's secure. It's where I get my XRP daily. You can find a link to Uphold in the video description below. So what is Elliot wave theory? Elliot wave theory is technical analysis. So looking at price charts and deducing patterns to try to predict future movements. It describes price movements in the financial markets. It was developed by Ralph Nelson Elliot. This guy studied 75 years worth of yearly, monthly, weekly, daily, and self-made hourly and 30-minute charts. His theory gained notoriety in 1935 when Elliot made an uncanny prediction of a stock market boom and became a staple for thousands of portfolio managers. So this guy is just absolutely brilliant. He studied almost a century worth of data, and this is what he came up with. When prices break out, they typically go up and down, right? But he has 5 waves, and then after the 5th wave, there's a corrective phase, right? Anytime an asset goes up in value, people are going to sell, right? But on that way up, there's 5 booms. So if we look at XRP's price chart from 2014 to about 2017, it took 3 years to complete the 1 wave, 2 wave, 3 wave, 4 wave, 5 wave, okay? Taking previous market behavior and charting it on the XRP price chart, we're seeing a value of $26, $27 by mid-2026, pardon me. Now keep in mind, guys, I said this in my last video, the current macroeconomic situation is something crypto has never seen before. In the past, when there's a Bitcoin halving, a few months after that, we see a bull market. This time, it may be different. I'm not going to lie to you and tell you I've been in crypto for a decade. I got into it maybe 3 years ago, but some people believe it's not going to be different this time. Personally, because crypto is a risky asset, I think it will be different. Ultimately, just time will tell. Take a listen right here, guys, to this clip.
We remain committed to continue confronting those threats, both here in the United States and overseas. In this heightened environment, there's no question we're seeing an increase in reported threats, and we've got to be on the lookout, especially for lone actors who may take inspiration from recent events to commit violence of their own. So I'd encourage you to stay vigilant, because as the first line of defense, protecting our communities, you're often the first to see the signs that someone may be mobilizing to violence.
Not only do we have a crazy macroeconomic situation, the market is probably going to correct in the next year, maybe even before that. And it could be a few months, a few years before we see another bull market. Take into account a war as well. That's not usually great for assets unless you're buying Lockheed Martin in these military stocks. So yeah, I hope you guys enjoyed the video. If you guys like daily crypto content and you enjoyed this video, subscribe. You always can unsubscribe if you don't like a video in the future. And thanks for watching. God bless you all. Take care of yourselves. Take care of your families. Until next time.